Stock market has been hit hard this past month, and Apple's stock price has dropped by 5%. However, just because the stock price has dropped, does that mean it's at a fair value for you to add it to your portfolio? That's what I'm here to answer in today's video. I'm going to go over how Apple compares to others in its sector, look at the fundamentals that determine the health of the company, share with you what I see as a price target and whether I'm buying or waiting, and stay tuned to the very end. We'll be looking at different chart patterns to predict where the stock price may be heading. And if you're here and on my channel, I'll discuss investing in stocks, ETFs, while also sharing my own personal investing journey with the hopes of inspiring you to start growing your wealth. Let's jump into Seeking Alpha. Looking at Apple, ticker symbol AAPL, we can see that its current share price is $147.11. Within the last month, it has fallen 13.14%, and just within this last week, it has fallen 5.27%. Moving over to its 52-week range, it's right below its medium range, which is $122.86, and its high is $182.94. Right down here, we can see its current market cap is $2.31 trillion, and its current PE value is 23.94. If you're not familiar with PE, PE stands for price to earnings, and it is your current share price, $147, divided by earnings per share, which is 6.15. That'll give you the 23.94. Moving over to growth, Seeking Alpha gives the revenue growth of Apple a C+, being at 14.82%. It is about 1.74% higher than the rest of the sector. Right down here for the long-term growth, Apple is at 13.23%, and that is about 11.81% lower than the rest of the sector. Looking at the valuation, for its PE, Seeking Alpha gives it a grade of C, being at 23.94. It is 30.7% higher than the rest of the sector. Right down here for its PEG, the value is 1.81, which is about 29.39% higher than the rest of the sector. Now for the PEG value, it is the PE divided by the long-term growth that we looked at, which was around 13%. So we have 23.94 divided by the 13.23, I believe, 23%. And I'll give you a 1.81. And looking at this value, you want it to be close to 1 as far as being a fair value. So the graded value above 1 the company is, it's seen as being overvalued, and being less than 1 is seen as being undervalued. Scrolling down here, for its price to cash flow, we have 20.60, which is about 20.43% higher than the rest of the sector. With price to cash flow, basically this is the price you're paying, so $20.60 for every future dollar of cash flow. Next, looking at how profitable the company is, right here for its EBIT margin, Seeking Alpha gives it a grade of A+. And what the EBIT is earnings before interest and taxes, and that is divided by the net income. So this is what percentage of the revenue gets turned into profit. For Apple, it's 30.93%, which is at a 277.83% higher than the rest of the sector, which is pretty great. Its dividend yield is 0.63%, and I'll give you about 92 cents annually. Its payout ratio is 14.29%, and it has grown that dividend for the last 5 years at a rate of 8.75%. And that's grown that dividend for the last 9 years. Moving over to everything money, what I want to see right here is whether the dividend that Apple's paying out is manageable by the company. So we did see that the payout ratio is about 14%. So looking here, its 5-year average of free cash flow is $75 billion. So it's been paying out 14.73% billion dollars. So it can definitely afford paying this dividend. So I would say it is a safe dividend stock to own. Looking over here on the income, looking at its revenue. So we saw what the growth of revenue is. So looking at here, we can see that for the last 5 years, it has grown from $247 billion to $386 billion. So as a nice revenue growth. And down here, looking at its net income. So its net income, it's grown from $53 billion to $101 billion. And the net income is basically the profit that the company has. Scrolling down here, for the share price outstanding, we want to see the company buying back its shares, because that basically benefits the shareholder as getting a larger piece of the pie. So right here, last 5 years, it was around 20 billion. So right now it's at 16.28 billion. So that's really good. It's been buying back its shares. Over on its balance sheet, we want to look at its assets versus liabilities. So right down here, its current assets are $118 billion and its long-term assets are $232 billion. Right down here for its liabilities, its current liabilities are $127 billion, so that's a bit higher than its current assets. For its long-term liabilities is at $155 billion, so that's close to $80 billion less than its current long-term assets. Over on its cash flow, we want to see if its free cash has been growing year to year. So down here, for its free cash flow, we see about 5 years ago it was at $54 billion, and right now it's at $105 billion with an average of about $75 billion. So that's really good that the free cash flow is growing. And what's important about free cash flow is that it enables the company to do 5 different things. First is to pay dividends, also buy back shares, pay down debt, buy acquisitions, reinvest in the company. The other thing, talking about paying down debt, is with $75 billion, it can easily pay off that $155 billion within 2 years about. So that's really good to see if the company needs to get rid of all their debt, especially with the high interest rate. It can easily afford to pay that debt off within a couple of years. If you found value in this content so far, let me know by smashing the like button. And also, if you're looking forward to seeing other stock analysis, definitely consider subscribing to the channel. Let me know down in the comments what your thoughts are about Apple and whether or not you have any portfolio or are considering buying it with the discounted share price. Moving over to the stock analysis, right now the values I put in around the 5-year mark. So for the revenue growth, considering it as being a large company, I don't see it as growing as fast. So I put values here of 7, 8, and 9. For its profit margin, its net income has been increasing over the years. So I'll keep it around this 5-year average. And I chose the values 22, 22.5, and 23. For its free cash flow, it has grown its free cash flow a lot from the past couple years. So I'll keep it the same around this 5-year mark. So I have 24, 24.5, and 25. Right down here for its PE and for its price to free cash flow, I want to keep it underneath 20. So right here for both of them, I have 16, 18, and 20. And I have a desired return of around 10%. So scroll down here, we can see based on my assumptions, the current share price is underneath my high. Right here for a multiple earnings is like right below that. And it's about $13, $15 lower than its discounted price flow. What I'm really looking at is in this mid-range, I want to see Apple around the 130s. And that's where I'm really looking at buying Apple as far as adding to portfolio for getting more bang for my buck. So I'll be waiting on this, not buying it just yet, seeing if it can drop a little bit lower into the high 130s, low 130s. Over here in TradingView, looking at Apple. So right here, each of these different candles are representing 1 day. And then we have 4 moving averages. The purple is 25-day, yellow is 50, green is 100, and then white is 200. And then down here we have 2 different momentum graphs. So looking at the current time, or current days right here, we don't have a lot of strength and we're in like a negative energy right here. So it's going to take a lot of energy to have us push up like it did over here, especially through all these moving averages. Since we're below the moving averages right here, we're only a lot of energy pushing upwards. And we're also in the oversold. So you can see here, since we're in a negative energy, basically just bounced right down. So you can see here we had a little arch there. Kind of like over here, since we're in a negative energy here, we're going on here, we were moving up through the sweet spot here, and we stayed here a little bit, and then it just drifted downwards. We just, the stock just fell and tried to recover right here, and no luck there, having negative energy. We had some positive right here, and that gave us enough energy to go through our moving averages here and make a new high up here. And we stayed there for a little bit and then came back down. You can see the energy turned back negative right here, and we've just been falling since then. That was about early April. Yeah, early April. Right here we have this purple line. So right here we touched the 25-day. Right here we're about to touch 25-day and just bounce back. And so since we're in negative energy, we didn't have enough to actually move back through these moving averages. So what I'm thinking, since we've been in a downturn over here, similar to this pattern right here, we were in this negative energy and it tried to bounce back and we came back down. That's what I'm thinking is going to go on over here. Possibly we have some movement, maybe like this, just some volatile sideways movement. I'm saying we're going to be bouncing around maybe in this 140, 150 range and possibly continuing downtrend, especially if the market is continuing to move down these next few days, couple weeks. That wraps up my analysis of Apple. Just as a review, right now I'm really looking to wait till Apple's around the 130. I'm thinking it'll still probably continue downwards or at least move sideways right now. So that's my plan. And just remember, I'm not a financial advisor, so definitely do your own research before investing in any stocks. And if you're looking for more stock analysis, check out this video right over here where I did top stocks that are in Warren Buffett's portfolio. Catch you in the next video. Peace.